Nvidia sinking in pre-market after Chinese officials announced an antitrust probe into the U.S. chipmaker. Joining us now, let's bring in Dan Newman, who is the Futurum Group CEO. Dan, you see a headline like this come across, got to wonder what goes through your mind, especially as this goes directly at the poster child of the AI trade.
Yeah, Brad, good morning. First of all, nobody should be surprised to hear about an ongoing set of probes against Nvidia, especially coming from China. Now, there's sort of two sides to this one. There's the first, which is the more ongoing microaggressions that exist between Chinese and U.S. firms. And of course, as China continues to struggle to keep up with the most leading edge advanced AI chips, they probably want to do what they can to slow U.S. firms down. On the other side, China's talking about a 4-year-old commitment that came from Nvidia to make sure that Mellanox, which is the networking technology that they've bought that's really enabled Nvidia to continue to create differentiation in these systems that they're building, and saying, hey, is Nvidia helping enough with Chinese-made chips and using this networking technology to advance what China is doing? And of course, that's a challenge too, because China is so far behind right now due to a combination of controls, a lack of the materials and technologies to build the most modern AI chips. So I think what we have here is really more of a macro geopolitical strain than a real probe. But Nvidia is so successful that they're going to get probed by every regulator in the world over the next few years.
Following the announcement by China's State Administration for Market Regulation that it was looking into the chipmaker giant for possible infractions of Chinese anti-monopoly regulations, Nvidia's stock fell during pre-market trade on Monday. The antitrust watchdog announced on Monday that it is investigating Nvidia's 2020 acquisition of Mellanox Technologies, an Israeli-American manufacturer of networking hardware. According to a translation of the announcement, SANR stated that it has opened an investigation into Nvidia, although it did not specify when the investigation will begin. Days after the same Chinese regulators, together with regulators from Europe, Mexico, and the United States, approved the $6.9 billion agreement. It was finalized in April 2020. The deal was first reported in March 2019. According to Bloomberg, Chinese regulators approved the agreement on the condition that Mellanox notify rivals of new goods within 90 days of supplying them to Nvidia, and that Nvidia refrain from discriminating against Chinese businesses. An inquiry for comment was not immediately answered by Nvidia. Pre-market trade on Monday saw a more than 2% decline in the chipmaker's shares, which have soared more than 180% since the year began due to the artificial intelligence AI boom. As Washington tightens penalties, China has launched an investigation into Nvidia on allegations that the U.S. chipmaker violated anti-monopoly laws in connection with a 2020 agreement. The government stated in a statement on Monday that the State Administration for Market Regulation has launched an investigation into the company's recent actions and the events surrounding the purchase of Mellanox Technologies Lund. 4 years ago, Beijing approved the agreement on the stipulation that Nvidia refrain from discriminating against Chinese businesses. Only a week after the Chinese government prohibited the shipment of a number of commodities with technological and military uses, Beijing's latest response to the growing U.S. technology restrictions is the action against Nvidia. Demand for chips that can run AI programs has caused Nvidia's market value to soar this year, making it one of the most expensive publicly traded businesses and China's biggest corporate target in the tech trade war thus far. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
I guess having a significant impact just on the roadmap there in China, what that future strategy looks like. And you talk about the fact that this is a really a geopolitical headline. I guess then my follow-up would be, how big of a risk maybe does this, or how big of a risk signal is this to some of the other larger chip players who do still have exposure to China?
Every company is right now looking at the calculus of their business in China. We see companies like Qualcomm, Intel, AMD, all have double-digit percentage market share in China. And of course, they want to continue to sell into China. We also know that President-elect Donald Trump is planning to put some pretty strict tariffs into place. Now, of course, I always put a balance there because President-elect Trump does not want to harm the markets in any ways. I think a lot of his campaign was on creating a strong stock market economy. And of course, these firms like Nvidia are such a big weight on the indexes. He doesn't want to see them get harmed. But at the same time, we don't want to continue to feed China with the best and most advanced technology. And that comes from many of our companies, not just Nvidia. That comes from our cloud, computing leaders like Microsoft and Google. That, of course, comes from our OEMs, the Dells and of course, the, Lenovo's and other companies here that are really large selling systems, HPEs. And so they really have to think about how they manage that relationship. But I think as a whole, every company has to worry because China is such a large consumer of products and, of course, technology leadership from the U.S.
Nvidia's $7 billion acquisition of Mellanox was allowed by China, but only if the Israeli manufacturer of computer networking equipment told competitors about its new goods within 90 days of Nvidia obtaining them. A request for comment was not immediately answered by an Nvidia official. According to its last financial report, Nvidia's Chinese clients account for almost 15% of its total sales. Following the opening of the New York markets on Monday, Nvidia's stock dropped as much as 3.5% to $137.42. Washington has prohibited Nvidia from selling its most cutting-edge chips to Chinese companies in an effort to impede the country's advancement in chip technology. Additionally, the U.S. has encouraged allies to take comparable actions. The Dutch government was under pressure from the Biden administration to stop ASML holding NV, which controls a monopoly on machines that produce the most sophisticated chips, from selling its best-performing machinery to China and from fixing and maintaining it. Beijing has sharply criticized these export restrictions and has specifically singled out U.S. corporations. Last year, Micron Technology Incorporated issued a warning that a cybersecurity investigation being conducted by the Chinese government may potentially impact around half of its sales that are linked to clients with headquarters in China. China's cybersecurity watchdog had banned Micron's chips from vital infrastructure after claiming that the company's products had not passed an assessment. However, both domestically and internationally, Nvidia's hegemony in the ag chip industry has come under fire. The company's graphics processing units, which initially gained popularity in video games, are becoming more and more necessary for emerging systems that train AI systems and big language models. Even while businesses like Amazon.com Incorporated are trying to weaken Nvidia's hold on the market, the chips are currently in high demand and expensive, costing tens of thousands of dollars each. According to a report by Bloomberg News earlier this year, the U.S. Justice Department requested evidence regarding potential antitrust violations by Nvidia. According to people familiar with the situation, antitrust authorities were worried that Nvidia was penalizing customers who did not exclusively use its AI processors and made it more difficult to move to other suppliers. In an inquiry of AI processors last year, France also singled out Nvidia. Benoit Coeur, the head of France's antitrust agency, stated at a press conference in July that the corporation might be charged with antitrust one day there. In 2023, the European Union launched a similar preliminary investigation to look into claims of anti-competitive behavior in AI technology. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
In any tit-for-tat kind of scenario that we see play out, it's typically the companies that have the largest revenue exposure to China that we see have a bit of a pullback here as investors start to recalculate what the interim period at least holds. Based on what we've seen before, and then what we've also seen before in exemptions, what type of exemptions are you anticipating, and what even quantifiable pullback could be on the table if we were to see this play out in a broader kind of tit-for-tat that impacts some of the largest U.S. companies that have the most revenue exposure to China?
Yeah, I mean, we've already seen a little bit of this play out in the real world. We've seen Micron get significant challenge from China. That impacted revenue substantially. And before that sort of big high bandwidth memory pivot that happened over the last year with AI, it really harmed Micron. And then, of course, we recently heard some probes into Intel and the business that's going on with Intel. And of course, we know Intel has been in a delicate position. So NVIDIA is a little bit of a different play. And there's been this ongoing sort of moving target of creating these scaled back AI chips that could work in the China market. But recently we heard, anything below 7 nanometer, they were going to cut off through these new export controls. That's basically every chip that's been designed recently for that market. And so you're talking a multi-billion-dollar impact, double-digit % revenue for NVIDIA, not as high as some companies. Others like Qualcomm have even higher exposure, but we expect this to continue to play out. There just is no circumstance until, over the next few years that, China and the US aren't going to continue to strain, because AI is not just about this technology. It's really about global economic and defense leadership. And the US doesn't want to weaken its position.
Dan, when you take a look at the reaction that we're seeing in pre-market here today, you've got shares off just about 2%. That move to the downside, is that a bit of an overreaction, or is it something that maybe does make sense given some of those longer term concerns?
I expect a series of ongoing probes that will take place. I think this will hit the news cycles every quarter or two with a different part of the world probing NVIDIA. I think some investors may get a little bit spooked when these things happen. China, of course, is such a large market, but we also have to let this play out because, like I said, the growth of NVIDIA, they can barely fulfill all the demand outside of China right now. The growth is so incredible, but this is also a company that's run up to around a $3.5 trillion market cap. So there's also going to be breathing periods. And I think investors may look for moments and signals to maybe sell, take some profits, and then possibly re-enter if there's a meaningful pullback. But I think it's just the beginning for NVIDIA and this entire AI trend, which I heard your guest before talking about the exact same thing.
According to a recent Wall Street Journal ranking, Apple is the best managed firm in the United States. Nvidia ranked second out of 250 firms, with Microsoft, Intel, and MasterCard rounding out the top 5 this year. The 5 criteria used in the rating, which was created by the Drucker Institute, are financial strength, innovation, social responsibility, employee engagement and development, and consumer happiness. This year, Apple and Nvidia overtook Microsoft, which had been at the top for the previous 4 years. Apple scored highly on both financial strength and innovation. Additionally, Nvidia placed first in terms of financial stability and second in terms of staff engagement. The two businesses have been vying for the title of most valuable firm in the world. At present, Apple's market value is at $3.67 trillion. As of Friday's market close, Nvidia is valued at $3.49 trillion. The chipmaker's stock is up nearly 200% this year as demand for its AI chips soars, giving it a huge boost. That contrasts with Apple's 30%. This year, Microsoft has also experienced robust growth, increasing its share value by about 20% to reach a market valuation of $3.30 trillion. In terms of financial strength and innovation, the business also came in close to the top. In contrast, Intel has had a difficult year. After failing to improve the business's performance, Intel fired Pat Gelsinger, its CEO, last week. Intel is ranked as the 4th best managed corporation in the nation. Intel revealed a $10 billion 2025 savings plan in August. This involved cutting almost 15,000 employees, or 15% of its workforce. These were the most consequential changes in the company's history, according to Gelsinger at the time. According to CNBC, Intel also allegedly engaged Morgan Stanley and other experts to help stave off any activist investors. As the index moves toward AI pioneers, Nvidia was added to the Dow Jones Industrial Average, which includes 30 of the top U.S. stocks, in place of Intel early last month. Nevertheless, Intel placed second in customer satisfaction and first in social responsibility out of 250 businesses. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.